Hello, and welcome to the Market Pulse Live with FX Pesa. My name is Rufas Kamau, Markets Analyst at FX Pesa. And today we'll be having the fourth episode of the Market Pulse series. So we have covered quite a lot of ground. We covered pound USD, covered energy. Apologies. So there's a lot to cover today. These are quite an interesting topic. So for the fourth episode, we'll be covering how to trade Bitcoin and Ethereum CFDs. So in this particular session, we'll have quite a number of achievables. One, we look at how to trade CFD crypto on the MetaTrader 5 trading application. Two, we look at technical analysis of both Bitcoin as well as Ethereum. Three, we look at the tokenomics of Bitcoin as well as Ethereum. And also we look at where to find information about Bitcoin and Ethereum. And lastly, we'll have a Q4 outlook for Bitcoin and Ethereum. So I'm hoping it's going to be quite an informative session and you'll get to learn a lot. So before I proceed, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live chat, and this will confirm that everything is working just fine. Hi, Christopher, and thank you. Thank you for the response. I really appreciate this. And I always appreciate when you take your time and join these sessions. It really brings out of value in this particular session. Hi, Paris. Welcome to the session. Let's get this started. So when I talk about Bitcoin as well as Ethereum CFDs, I'm basically talking about contracts for difference. And I think this is the most important part of the session. First of all, we get to understand what CFDs are. And once we understand what CFDs are, then it becomes easy to trade. So let's say you just use a very simple illustration. Let's say this is a Bitcoin CFD contract. So as mentioned, CFD is a short form for contract for difference. So whenever you have a contract, and this basically applies to all kinds of contracts, we all know there's always two types or two parties represented in the contract. And one side of the contract is the buyer, and the other side is the seller of the contract. So when it comes to contracts for difference, they have a derived value, basically meaning that they derive the value from the underlying asset. So I'd like to highlight these as underlying asset. So they derive the value from the underlying asset. So in this case, the underlying asset would be Bitcoin. So what this basically means is that this agreement between the buyer and the seller gets its value from the price of Bitcoin. So when we agree that this contract basically mirrors or copies the value of Bitcoin, basically means that if you buy this contract right now, let's say you buy at the current price, and the current price of Bitcoin as at right now, just checking right away, is 20,287. Then it basically means that if the price of Bitcoin gains by a certain value or percentage, then the contract will also gain in a similar manner. So on the other hand, if the price of Bitcoin goes down by a particular price or percentage, then the contract will also lose in value by the same value. So this basically means that if, for instance, the price of Bitcoin goes down, let's say by $100. So try and type this. So if the price of Bitcoin goes down by $100, then also the contract basically goes down by $100. So I'll write this quickly. So if let's say it's after 1, 2, 3, or even 4 hours after buying this contract and the price goes down by $100, and then you decide to sell the contract at, in this case, the new price. So this would be 20,187. Then this basically means that you've made a loss on that particular trade, and that loss is equivalent to $100. And that's basically how CFDs work. So you're able to speculate on the price of Bitcoin without actually owning that particular asset. So in this case, when you're trading in CFDs, you don't actually own Bitcoin. And this makes it very easy for you to trade, especially if you're very new to Bitcoin, you don't understand how it works, but your only interest is to make a profit out of the price movement. So if you're a speculator, if you're a trader, and you're interested in making profit by trading cryptocurrencies, then with FX Pesa, you have this product right away with over 100 coins available for trading. And with all these coins, you're able to speculate on the price movement. So this does not concern owning, holding, depositing, or withdrawing any kind of Bitcoin. So when you're trading with FX Pesa, it becomes a real easy job. So let's say how you go about it. So the first thing that you need to do is to go to the FX Pesa website, that is fxpesa.com. So once you get to the website, register for an account. So I'll be sharing the live link on the comment section. So from here, you basically register for a real account. Once you register for a real account, then go to the login section and then download the trading application. So this is a stage that I've already described in previous sessions. So if you're very new to trading, you should probably head straight to the Novice to Pro series available on the FX Pesa channel. So if you go to FX Pesa channel on YouTube, I'll just do a very quick display. You scroll through these and get to the Novice to Pro series. I've done a 10-episode series helping you transition from a beginner to a pro level trader. So basically start with the Novice to Pro with the Rufas Kamau episode 1. Once you go through these, practice the ideas therein, go to episode 2, 3, 4, 5 through to episode number 10. So once you get through this, then it becomes easy for you to begin trading. So now that we are past that particular stage, now this is the MetaTrader 5 trading application. So I'm sure that you have been trading, then you understand all these concepts. So let's look at these. So we have quite a large number of cryptocurrency CFDs available for trading on this particular platform. So these CFDs have different names. So for instance, this is AVE. I don't know how you pronounce this, AAVE. It's a very popular cryptocurrency platform. We have Alchemix, we have ApeCoin, this is Atom, this is Aurori, this is Avalanche, this is Axie Infinity, this is Balancer, this is a basic attention token, this is Bitcoin Cash, this is Binance Coin, we have Boba, we have Bitcoin here, we have Celsius, we have Chiliz, we have Compound, among other coins. So all these coins are available to trade, and they are all in form of CFDs. So one advantage of trading these CFDs is that they come with leverage, so you're able to trade a big position even if your account balance is small. So for instance, if you're trading Bitcoin, you have leverage of 10x, basically meaning that you can buy 10x higher than the amount in your account balance. So if you're speculating that the Bitcoin price is going up, and let's say you have $100 in your account, you can speculate with up to $1,000 in that account. So if price goes up, then you benefit as if you owned $1,000, whereas you only had $100 in your account. And this gives you some real good opportunities, but at the same time, it also increases the risk. So if you're on the losing side of the trade, you'll be losing as if you're holding $1,000. So that's a pretty important point to understand. So how do you actually execute a trade in Bitcoin, Ethereum, or these other cryptocurrencies? So it becomes very important to learn how to do this. It's pretty simple. I'm going to do a very simple illustration. So the way you do this, I'm hoping that everyone can see this. So you head straight to the new order section. This is Bitcoin chart. So click on new order, then select the amount of Bitcoin you'd like to trade. Remember, you can trade as little as 0.0001. So this is the minimum you can trade. That is like 1 over 10,000. And let's say you speculate that the price of Bitcoin is going up, and then you go for a buy trade. So you click buy by trade, and the trade is executed immediately. So if I go to a smaller time frame, such as the 1 minute chart, then you can see the price at which I bought. So this is the price at which I bought Bitcoin. And as you can see, prices proceeded downwards. So this means that if I was to sell the Bitcoin that I bought right now, I would sell to the highest bidder, that is the green line here, and I would sell this at a loss. So the amount that you lose in that particular trade is indicated here in terms of dollars. And since this is a very small position, then the amount I could lose is under 1 cent, less than 1 bob, less than 1 Kenya shilling, or basically 0.01 of a dollar. So you can trade even with a very small amount. So when you look at the margin requirement, this is the amount of money that you are supposed to have in your account in order to execute such a trade. This was $0.2. So it's a very, very small amount. So this means that there are no barriers to entry. So if you want to trade Bitcoin, you're not limited to amounts. Even if your account has $10, $100, $1,000, you will be able to participate in this particular market. So as long as you do your analysis and speculation fine, then you're able to speculate on the price as well as movement of Bitcoin. So when it comes to setting a stop loss, we all know how to do this. Click, hold, and drag the lower side. Let's say you want to risk 0.02 of a dollar, which is like 2 shillings, very small amount. And then let's say 0.05, that's like 5 shillings. And this is like literally the smallest you can trade in Bitcoin. So let's close the trade, click the small X button, and that's it. We have closed that trade. If I go to my account history, then in this particular trade, I lost roughly 0.00, less than 1 cent in that particular trade. So let's try a bigger amount. So instead of trading the smallest, let's go 10 times higher. So 0.001, then you go for a buy trade again. Let's see how this works. Click, hold, and drag. So in this case, if we set a stop loss here, negative 0.06 of a dollar, to the upper side, let's say 0.05 of a dollar. So this is like 6 bob versus 5 bob. So a very small amount again, so quite insignificant. So let's try again a bigger amount. So this is something that you always do when you're trading on a demo account to make sure that you're trading the right amount. So buy by market again, and now notice that 1 point is worth 0.01 of a dollar. This might make sense, especially if you have a small account. So if your account is, let's say, under $1,000, then this might be a logical value to trade with. So in this case, let's say you risk $2 in that trade, then you set a take profit of $5, and now you let the market do its thing. So it's a very simple. The margin requirement for the trade in this case is $20.27. If you have over $20.27, then you're able to execute such a trade and benefit from the price action movement. So that being mentioned, if you have any questions arising from the presentation, then feel free to raise those questions, and I'll be responding to those questions right away. So make sure that you participate as much as you can, and I'll be responding to those questions as we go. So getting out of responses here. Hi, Maya Africana. Hi, Joseph. Hi, Annette. Have we discussed gold? Sorry, I'm late. No, we have not discussed gold, mainly as a result of today's topic, which is basically trading gold as a, sorry, not gold, but Ethereum, as well as Bitcoin CFDs. So let's proceed with the presentation tonight. So now that we have learned how to simply execute a trade on Bitcoin as well as Ethereum, now we move on to technical analysis of both Bitcoin as well as Ethereum. So let's get started with this. And I think this is the important part of today's presentation because we want to try and understand the critical price levels for Bitcoin as well as for US dollar, so that it becomes easy for you to identify potential trade levels. So one key thing to notice when it comes to Bitcoin as well as Ethereum, they have been trading relatively sideways for quite a period of time, with a particular bottom clearly observable around this area. So I just want to zoom out the chart. I can close the thread just to remove the noise of the chart, then try to get an understanding of what's happening here. So one thing is clear, Bitcoin has been bearish for the better part of the year, with a bottom somewhere around $18,099 per Bitcoin. So if you look at the resistance, we have had some resistance levels playing around this area, 22,787, and one outlier, one particular period of time, when Bitcoin rallied all the way up to 25,287, and this has been the story of the year since the market started the bearish momentum. So this is what we have been basically experiencing for the last couple of weeks. Basically, Bitcoin going down and then up and then down, continuously retesting the support at $18,000 per Bitcoin, going up, down, and this is the current price level. So recently, we had news, and this news was basically affecting the US equities markets as well as US dollar currency pairs. But at the same time, it was also affecting the price of Bitcoin. So what we had is a period of time when Bitcoin was aggressively moving upwards or strengthening against the dollar. And then it entered a period of consolidation where it was trading inside a triangle. So when you talk about triangle, it's a price consolidation here that was basically following this particular pattern here. So this is what we was having earlier in the week. So this basically represents more or less like a flagpole and then a pennant, or basically a triangular flag. So since then, if you look at the announcement of the data that we saw yesterday, and this data I'm talking about is the US interest rate data, you can notice what happened here. So the green candlestick with long tails each end basically implies a whipsaw where the market goes up and then down and then back and closes near or at its opening price. So this candlestick can be described as a spinning top, but you can see the long stretch to the upper and the lower side basically represents a whipsaw period. So this is a period when price is very volatile, moving up and down, but doesn't quite achieve anything. There's no movement up or down. So a lot of traders that were participating during the news announcements were stopped out. And then from here, notice that the following candlestick, price moved downwards, indicating that the break is to the downside. So this was as a result of the Federal Open Market Committee basically announcing that they are ready to continue hiking interest rates. And this hiking of interest rates is expected to strengthen the dollar and weaken equities as well as cryptocurrencies. So risk assets are expected to continue weakening, while the currency of the US is expected to continue strengthening. So with this happening, notice that after the breakout, market went down for a while and then recovered, went back to retest the breakout point, retested this earlier in the day before pushing back down. However, when it got back down, yesterday's low seemed like a strong support, market reversed and then down. And now it seems like the triangle is turning into something totally different, which is now looking like a flag. So when you talk about a flag, you'll notice that now it seems like we have to adjust our trend line, remove this particular trend line here, which looks like a triangle. And now it seems like we are following a particular setup here, which basically implies that Bitcoin is trading in some form of a flag environment. So in this flag, it basically implies a consolidation zone where the overall directional movement seems slightly bearish, but it's more or less of a sideways momentum. So it basically implies that Bitcoin is neither going up or down, just playing in between the two trend lines. So overall, it's slightly bearish, but this doesn't seem as quite as aggressive. So now, with these two trend lines, it becomes easy to speculate on Bitcoin because now we are focused on the next breakout. So the next breakout will basically mean price breaking the upper trend line. This is our upper trend line here, or price breaking the lower trend line, and these are lower trend line here. So if price breaks the upper trend line, then we'll be more biased to trade towards that direction. And if it breaks the lower trend line, then we'll be more biased trading along this direction. So as we proceed, it's very important to note that this is not financial advice. This is not a recommendation to trade. This is very educational to help you understand the key concepts in trading, as well as understanding the price action movements in Bitcoin, as well as in Ethereum. So it's very important that you understand those points so that you can use them decisively in your trading journey. So Bitcoin forms a flagpole, a triangle, and then this eventually morphs into a flag, and now we'll be awaiting the next breakout. So if the dollar continues strengthening, then there's a good chance that gold will break out to the lower side and continue going down. But if the dollar weakens, then there's a chance that you will see the price of Bitcoin breaking towards the upper side. So one key example to observe is what happened some time back. And I think this is clear for everyone. From this low to this high, it's clearly a strong impulse movement. Then after the impulse, the market was largely consolidating along this area here. So you can see the series of highs that it was forming, as well as a series of lows. So from here, market goes down, and then up, and then down, and then up, down, up, and then jumps here, opens with a gap. So notice the sequence here. Market opens with a gap up, retests the breakout point, that is goes back down here, retests the area that there was a breakout, and then proceeds in the direction of the break all the way up, forming the next flagpole. So this is quite a common pattern in the market, and when you understand it, it becomes easy to trade. So consolidating, relatively moving sideways. So for this period, you can say that Bitcoin was trading this way. Then from here, breaks out, retests, and then accelerates up. And now we are in a similar sequence. Market accelerates up, trades sideways for a while. So the next breakout has a potential form a similar movement such as the previous flagpole here. So that's a key thing to watch, especially when you're trading Bitcoin, because there's that potential. It could make quite a significant amount. For instance, this move was basically above 12.71%. So if you're able to capture a move such as that one, you make 10% on your position. And this is within a couple of days. This is 1, 2, 3, 4 days. Then it makes a lot of sense to invest in such a market. So same case applies to Ethereum, similar thing. So notice what was happening here. So moving sideways for a while. So this is basically described as a consolidation zone. Then market breaks out. After the breakout, rallies all the way up to this point. So for 1, 2, 3, 4, 5, 6, 7 days, Ethereum was relatively going up. And if you measure from the lowest point, the highest point, this is a gain of about 30%. So after this moves into a sideways movement, or what looks like a flag. If this is the flagpole, this is the flag, then we are mostly waiting for a breakout. So if there's a breakout, let's say towards the upper side, then we go for a buy trade. If the breakout is to the lower side, then we go for a reversal short selling trade. So it becomes very easy to trade these crypto CFDs once you understand your technical analysis as well as your patterns. If you have a couple of indicators that have been working well for you, then you can combine these in order to strike a good trading signal. So that being mentioned, this takes us to the next part of the presentation, and this is the tokenomics. So whenever I talk about tokenomics, this is basically the economics behind a cryptocurrency coin as well as a token. So for instance, if you look at Bitcoin, the first thing to notice is that the total market cap of all cryptocurrencies is around 1.008 trillion. So out of these, Bitcoin dominates 38.6% of this market cap, whereas Ethereum dominates 18.8% of this market cap. This means that both coins, Bitcoin and Ethereum, form more than 56%, 57% of all the valuation of the cryptocurrency ecosystem, making them the most popular and also the most valuable coins in the ecosystem. So When you focus on Bitcoin and you go through the tokenomics, we know that Bitcoin is limited to 21 million coins. There will never be more than 21 million coins. So these coins are mined progressively. The number of coins mined each year gets smaller and smaller. And since the beginning of Bitcoin, that is 14 years ago, about 19 million coins have already been mined. And this basically makes what we refer to as the circulating supply. So the 19 million coins multiplied by the price of each coin will basically give you the market capitalization of Bitcoin, which is basically around 388 million coins. 388 billion dollars. Sorry, not million, but billion. So the fully diluted market cap, or basically, this is the maximum supply multiplied by the price of each coin. Then this basically gives you $426 billion, which is basically the total worth of Bitcoin. So if you look at the volume traded in the last 24 hours, it's about $59 billion. So maximum supply we'll ever get is 21 million. Total supply in the market is 19.197. So that means that when you also consider the amount of volume traded, the volume traded in centralized exchanges like Binance, like Crypto.com, FTX, this studies to $59 billion, whereas the amount of volume traded in the decentralized exchanges is about $500,000, 494,182, and this is within the last 24 hours. So it's very important that you understand the tokenomics so that you can understand the economics behind each cryptocurrency coin. So remember, the price is always driven by demand and supply. So when you know the supply and then you understand the demand that is happening in the market, then you're able to speculate on the direction of the price of that coin is taking. So if you look at the performance of Bitcoin year to date, it's relatively bearish since the beginning of the year, which was around 46K. And the current price is around 20K. Then it basically implies that we are down and by around 50%. So if you look at all price level, since they started tracking this data all the way back in 2013, then you can see the biggest spike happened in 2018. We went all the way up to around $20,000. Price crashed all the way down to around $3,400. Then rallied all the way up, got to around $60,000, dropped to around 30K, went up to around $69,000, and then crashed all the way down. And this is the price level we are having. So this small movement, or the small movements you observe around this end here, are basically the same that we are observing here on the chart. So when you look at Bitcoin, and then we look at 4-hour time frame, then we zoom out and we look at this price action here, is the same as the small curves you are seeing towards the end of that chart. So when you look at this particular chart here, and you focus on just this area here, then this is the same information that we have on this particular chart, indicating the final details of the movement. So Bitcoin rallying slowly, then going back down, moving sideways, and this is the price action here. So what we are seeing is a much more stable price of Bitcoin, which is basically trapped within two levels. So on the lower side, a very strong support at $18,000 and 100, and then a very strong resistance seeming to be around 22,787. So when you're trading Bitcoin, it becomes easy. Then it's all about observing the support and resistance levels. So if Bitcoin was to crash down to $18,000, then you can see what the market has been doing. So every time price crashes all the way to this level, then buyers come in strong, come out of demand and push the prices back up. So once you understand this particular concept, then it becomes easy to trade Bitcoin. Once it gets to this resistance level, then out of supply, or the buyers who are buying here, sell here, price goes back down. So there is that particular opportunity or potential that Bitcoin could crash back down and get to $18,000. And this would represent a very nice opportunity to buy Bitcoin at a very cheap price level. So if you are looking to hold for a longer term period, I think this is completely underpriced, especially when you consider the longer term price. So if you look at the longer term price here and you look at the adoption level in Bitcoin, this is a very cheap price level in this particular phase since we are approaching another Bitcoin halving. So Bitcoin halving is where the mining rewards come at half the value, basically driving more scarcity in Bitcoin, and this often has a bullish momentum to price. So the halving period that was 4 years ago was towards the end of 2019. So after this, Bitcoin became scarce and price started running up. So 4 years later, that is as we approach 2023 towards 2024, we'll be expecting Bitcoin prices to start running and moving towards the upper side. So it's a very important price level to be very serious about Bitcoin. So if you go to the candlestick chart and check on this, you can see that price was clearly moving towards the lower side. It was forming lower lows, lower highs. So from this high to the next high to the next high, they were getting lower. And also, if you look at the lows in the market from this low to this low, they were getting lower. But what we are seeing in recent price action is that Bitcoin is finding some very strong support along this area. So I'm just trying to draw this. So this seems like a horizontal area here where Bitcoin is unable to form lower lows, and these may indicate a weakness in the bearish momentum, where if I was to use an arrow, see if I can find one here. Yes, this is an arrow. So this was the general direction of the price of Bitcoin. But since we go to this low, it has formed a very solid bottom. And what we are seeing is the market breaking the upper trend line and forming a high that is significantly higher than the previous high. So if you look at this high here, compare with this high here, and then this particular high here, seems like the highs are now starting to become progressively higher. So there's a good chance we'll be seeing Bitcoin start moving towards the upper side. So the conditions that might facilitate Bitcoin moving towards the upper side is a loose monetary policy. So we know that the Federal Reserve Bank of the US has been tightening, and also other economies. The Eurozone has been tightening, UK has been tightening, and this is basically driving liquidity out of the markets. So with inflation running high, people are spending more money to buy basic commodities such as food, fuel, housing, education, healthcare at high inflation levels. And these things are becoming more expensive, and they have less money left to invest in risky assets such as equities as well as Bitcoin. So in this case, we have been seeing a bearish momentum for quite a period of time, and this is expected to continue. However, from the speech that we had from Jerome Powell yesterday, he basically implied that they could be changing tact, and this is pegged on how the economy responds to the recent rate hike. So after doing 75 basis points hike yesterday, how the economy responds in the next inflation report will be very important to how the Fed responds to that. So if inflation significantly slows down, then the Fed might consider pivoting or reducing the amount of basis points that they are hiking every month. And these would basically be bullish for Bitcoin as well as equities. So you'll be expecting the S&P 500, the NASDAQ, the Dow Jones all to be moving to the upper side, the dollar to start weakening, and also Bitcoin and Ethereum be moving towards the upper side. So as for now, the current data set that we have basically indicates a strong dollar and much weaker equities and also much weaker crypto. So when you focus on these and the price action that we are seeing here, it's clearly slightly bearish, but key point to observe is these two trend lines, one on the upper side, one on the lower side. If there's a breakdown, then some further momentum downside towards 18K. But if we break here, then there's that potential that we will be moving up higher. So it's a case of watch, wait, and see. And when something happens, then as a trader, you're able to respond to that and make money for yourself. So same case applies to Ethereum. So if you look at Ethereum chart right here, so I'll be doing this just right away. So this is a chart of Ethereum. Notice the flag breakout to the upper side, indicating a potential bullish momentum. So if I zoom out on this chart, you notice that Ethereum has been relatively bearish for the better part of the year. So last year, we know that cryptocurrencies were rallying, same case as the stock market. So the S&P 500 was moving up, the Nasdaq, the Dow Jones were all moving up since 2020. So there was a very strong bullish momentum. And then this year, we entered a bearish momentum. This is bear territory. So this year, you can clearly understand that this has been the momentum in Ethereum. But then, if I was to draw this trend line here, so I just want to plot this here. And then I do draw another one, the lower side here. Then you'd notice that this short-term movement here, try and delete this. Then you notice that in this case, Ethereum has already broken towards the upper side. And with this break, it basically implies that there is that potential that the trend has changed and is now headed higher. So a lot of investors are already betting on a bullish momentum as we approach the end of the bear market. And in this case, we might be expecting prices to now start moving towards the upper side. So prices are really cheap right now, and it's time to build up on the bullish momentum, especially if the Fed begins to pivot or show some signs of pivoting. In this case, we'll be expecting Ethereum to move back towards the 3,500 level. And this is pegged on purely the Fed and other central banks beginning to pivot, and this would push cryptocurrencies higher. So as for now, if you are an intraday trader, then the flag is very important. So you don't have to look at the higher time frame. You can go to the smaller time frame, look at the 1 hour chart, look at how it's performing, and then trade according to this flag to understand the price action movement. So just a moment. So the trend line, as already indicated on the MetaTrader 5 trading application, is basically indicating some consolidation level here. And from this consolidation, eventually, we will be seeing a breakout. And once the breakout happens, it will give us a direction on whether the price is moving higher or whether price is moving lower. So we are more interested in price breaking that trend line and moving higher, or price breaking that trend line and moving lower. So this is the anticipation or the expected direction of Ethereum. If it breaks up, we go up. If it breaks down, we go lower. We trade what we see, not what we think. So that's the expectation for both Bitcoin as well as Ethereum. So if you're looking for information about trading these cryptocurrencies, one of the websites you might want to check out is Masari.io. This is a very resourceful website when it comes to cryptocurrency information. It's also an analysis website where you get a lot of information about what's happening in the cryptocurrency space. You can go straight to news, check out what's happening in the cryptocurrency space, and then use this information to your advantage. So I'll be sharing the link live on the live comment section so that if you want the information, then you can go straight through it. So at the same time, we have Cointelegraph.com. This is also another news website dedicated on cryptocurrency coins. So from here, you get to read a lot of content on what's happening around the cryptocurrency space and use this information to your advantage. So for instance, we are expecting a web summit in Lisbon on the 3rd of November. That's basically today. So latest updates are from Cointelegraph's ground team. More, Japan's digital agency launches a DAO to explore DAOs in Web3, courtesy founder on what it needs to be done to make Ethereum scalable. Fidelity transfers retail investors commission, free BTC and ETH trading. BNB chain cools off after 24% charge surge, but strong fundamentals could back the next BNB rally. So all these news are available here. So whenever you want to do analysis, know what's happening in the space, then you can always borrow these concepts and use them to your advantage. So that being mentioned, I hope this pretty much gives you an idea of how to trade the CFDs, some of the websites where to get the information. At the same time, you get an understanding of what's happening in the space. Twitter, there's a very strong community when it comes to trading crypto CFDs. So it's very important that you understand and follow major crypto leaders in the space, and this information will help you in the overall long run. So, time to check on the questions. If you have any questions, I want to check on those questions right away. So I know there's a question about gold. Gold is not in today's presentation, but I can check this. So out of our clients tend to trade gold. So it's an important part of our analysis. So gold has been quite volatile for the week, and that's an understatement. We have seen a very strong bottom happen here. Happened some weeks ago, and then 2 weeks ago, and then this week happened to be a very strong bottom here. So that seems like a very strong bottom for gold. So whenever you see price bouncing from here, there's a good chance we'll be seeing a reversal. So at the same time, if you look at the most recent price action, this high here, combined with this high and then this high, then there is that potential that if this rally continues, then it might not go as far, but there is that potential that it might get to this particular level here. So that's one key thing to consider. And the price level is basically somewhere around 1650. So 1650 seems like a pretty normal target for gold, especially if this bullish momentum happens to continue. But if price breaks that level, then there is that potential that it could go lower. So if you use the daily chart and you look at the new levels we're experiencing here, so just follow this. Just want to compress this chart, get to the expectation here, then the level just right here, and this is about 1560. So if I now move this like this, then a breakout below this bottom could see gold crash down to 1560. So just like we saw here, price bouncing, going up, goes back, bounces a little bit, and then breaks all the way down to the lower trend line. So after this rise, getting to the upper trend line here, I'm hoping everyone can see this. So this was a major resistance level here in this particular chart. So just adjusting my trend line here. So after getting to the upper trend line, gold goes down, rebounces, goes back down. So if it breaks, we are going down to 1560. But if the bullish momentum continues, then the chance is that the market now goes up to 1650. So those are two key price levels in gold. These are major support level. If it's broken, 1560 becomes a target. But if the bullish momentum continues, then the short-term target lies at 1650. So I think that's my opinion on gold. So for Ethereum, if you look at the price levels, a key target would be this previous high here. So a break above the flag here would basically see Ethereum rally to the previous high. So the previous high is around 1637. And if price was to go down, we cannot ignore this bottom here. So this 1479 or basically 1480. 1480 seems like a reasonable support level here. But then if you are to go down based on the previous highs and lows, then there's more room to go to the downside. And this would target 1368 price level. So 1368 price level seems like a target. So this is the price level, 1368, 1370 or thereabout. You can see there is some open space here. So if price was to break the lower trend line here, then the movement could be smooth, potentially 1370, and this could be a reasonable target for trading Ethereum. So this marks the end of my presentation today. So let's see if you have any questions. So please chat S&P 500 also. Did you say Bitcoin movement is relative to equities? Yes, absolutely. There's a very strong correlation between Bitcoin and equities. So if you look at Bitcoin and overlay that on S&P 500, then you would basically see the strong momentum. So I don't know if you can get this on a chart. Let's see if we can do this. So let's say we check on the S&P 500 stock. So this is the S&P 500 year-to-date performance. Clearly, it's down 22.13%. So if you were to do a comparison, don't know if there's a place to add here. I think there should be an option. Just checking quickly. Yes, compared to SP 500. Just a moment. Yes, I just found it. Yes, notice the two trend lines here. So mostly these two have been going down, and if you look at the two lines, they are very similar, basically indicating that these two assets have been largely moving in the same direction. Though not at the same pace, Bitcoin tends to be more volatile compared to the S&P 500. So the S&P 500 is the yellow line and the Bitcoin is the blue line. So when things are going down, Bitcoin will be moving at a wider margin or at a wider percentage than the S&P 500. So the S&P 500 is down about 20%, but Bitcoin is down 67.88% in the last 1 year. So there's a very strong correlation between the two. So when S&P is going up, Bitcoin is also going up. When S&P is going down, then Bitcoin is going down. You can see the two lines are almost similar. So when you're doing your fundamental analysis to understand where the market is headed, when you're trying to analyze the Fed and the decision it's making, when you understand the information, you can either choose to trade the slower asset, which is the S&P 500, or trade the volatile asset, in this case, which would be Bitcoin. So if you're winning, you will probably have a bigger margin. And also if you're losing, then you will also be having a bigger loss. So it's high risk, high reward market, low risk, low reward. So if you are very afraid of volatility and movement, then you should probably stick to the S&P. But if you are comfortable trading in a high volatility environment, then Bitcoin might be the right asset for you. So I hope this clears things up. So thank you very much, guys. Thank you for your time, and also thank you for your participation. I always appreciate this. I hope to see you on the next session. I'm hoping I was able to provide value when it comes to CFD trading in Bitcoin as well as Ethereum. So thanks, Joseph, thanks, McKenna, thanks, Christopher. I always appreciate your responses.